Hey everyone, welcome back to Corporate Decoder. Today, HNRG just filed an 8K announcing a big asset purchase, and I am seeing a deal that could really reshape their business. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is buying a significant chunk of power generation equipment, and the price tag is substantial. Hallador Energy, a thermal coal company, filed this report on May 30, 2026. This filing is about a material agreement, which means it's a big deal for the company. So what exactly did Hallador Energy Company do? Well, they signed a deal to buy about 460 megawatts of Siemens, gas turbines, generators, and other related equipment. Think of it as buying a significant piece of a power plant's heart. This deal is with a company called Energy World Corporation Limited, and the price for all this equipment is a hefty $350 million. This is a pretty big number, especially when you consider Hallador's market cap is around $868 million. This acquisition is interesting because Hallador is primarily known as a thermal coal company. Buying gas turbines suggests a potential diversification or perhaps a strategic move into a different energy sector, maybe as the energy landscape shifts. It is a significant investment and signals a major strategic pivot or expansion. The press release about this deal was issued on the 1st of June, just a couple of days after the agreement was signed, which shows they wanted to get the word out quickly. This section confirms that the company made a public announcement regarding this agreement. It's worth noting that the filing itself doesn't go into deep detail about the specific terms or conditions, but it does reference the full asset purchase agreement as an exhibit. This is standard practice for these types of filings. What it does tell us is that this is a material definitive agreement, meaning it is a crucial contract that could significantly impact the company's finances or operations. Looking at the exhibits, we see the asset purchase agreement itself. While the filing is redacted in parts, the core information about the acquisition is there. The fact that portions are redacted might mean there are proprietary details or sensitive terms that the companies have chosen not to make public immediately. This is common in deals of this magnitude. The exhibits list shows the key documents attached to this filing. We have the asset purchase agreement itself, which is the main driver of this report, and also a press release. This gives us two primary sources of information about the event. And finally, the report is signed by Eric van der Maan, the Chief Accounting Officer. This indicates that the company's financial leadership has reviewed and approved the filing. It was signed on the 2nd of June 2026, reflecting the timeline of these corporate actions. So, what does this all mean for Hallador Energy Company? They are making a massive investment, $350 million in gas turbine equipment. This is a bold move for a coal company. It could signal a transition away from coal, perhaps in response to changing environmental regulations or market demand for cleaner energy sources. It could represent an effort to diversify their income streams or perhaps to support energy markets that are transitioning away from coal. The recent news also mentions an M and a call related to Energy World Corporation Limited, which makes sense given this acquisition. The key question now is how this massive investment will impact Hallador's financial performance and its long-term strategy. Will it pay off, or will it be a costly diversion from their core business? That is my take. Stay decoded. If you found this deep dive helpful, please like this video and subscribe for more. Check out the Discord in the description.